And we are nearly there, nearly there. We are live. Well, hello, Mike. Welcome to Paris and Baz Cast. We've been meaning to have this conversation for quite some time, but we're finally there. Thanks to COVID, we are through Zoom as well. How are you, Mike?
I'm very, very well. I'm disappointed not to be there at the long table. It's kind of like a famous set of property social media now, but it's good to see you nonetheless.
Absolutely, likewise. To all things tax depreciation, that's the topic of discussion today. And lots has changed, obviously, since the last time that we've met in the world of property, in the world of investment. Talk us through what you've seen. How has that impacted your business?
Yeah, look, not a lot has changed from a fundamental point of view with tax depreciation. I mean, we had some new effective lives come out the start of this financial year, but it's really just impacted the sort of consciousness and the sentiment at large. Of course, that impacts the whole economy, not just real estate. Specific to us, there is a little bit of a lag between when a property sort of transacts and when the investor might contact us. So it was difficult for us to know when we would really see the true impact, but it's probably starting to come now. We're probably about 3 months behind a property being sold. Obviously, it takes some time for a property to settle, and then people might contact us. And it's causing a few challenges around getting access to properties. But honestly, we can't complain too much. I'm not in the hospitality sector. I don't have an airline, so we'll be all right.
Absolutely, compared to that. So in terms of, let's just sort of to give a brief overview of the services that you provided, do you want to just give a bit of recap on your business, on your background as well, for those that don't know?
Yeah, so I'm a quantity surveyor, and our business MCG provides all the traditional construction cost estimating services. So for architects and developers and financiers, if you're needing to know how much something costs to build, that's really our specialty. My personal specialty is on the tax depreciation side of things, which is residential mum and dad investors, for want of a better term, and also the commercial stuff. So we do a lot of hotels and pubs and wineries and office complexes and those sorts of things.
Absolutely. And obviously this depreciation schedule is something that can be used for your tax purposes for the next 20 years traditionally. Is that correct for residential?
Yeah, 40 years normally. So 40 years is really the maximum effective life of any component, and that's related to the building. So if the building's built today, the report would show 40 years worth of depreciation deduction. So it's normally a once-off report. And believe it or not, I know we're all been a little bit distracted by this COVID-19 stuff. But we're mid-May already, so tax time's sort of on its way. So this is normally a pretty busy time for us, and we're expecting that even though the market is a little bit subdued with the transactions, there's probably, I guess, more of a time where investors are wanting to get as many deductions as they can to keep an eye on their cash flow and really have a little bit of a cash buffer.
Yeah, absolutely. And in terms of once they've acquired the property, is there like a recommendation? Obviously, the quicker the better, but is there sort of like a timeline of when someone should be getting a depreciation schedule by?
Yeah, look, the quicker the better is important, and yes, of course, in selling depreciation schedules, as we do, we want people to get that straight away because there's a chance that they'll forget and they won't potentially get it. But the reason why I think it's most important is that we crunched some numbers recently, and across 1,000 residential reports, we found that 6.9% of people were actually waiting too long to get their depreciation schedule. And what I mean by that is that it was more than 2 years, because you can back claim 2 financial years worth of deductions. Your accountant may charge you for that, but these people were waiting more than 2 years, and the average amount of depreciation lost was just over $20,000. Now, depending on what your marginal tax rate is, that could be $6,000 or $7,000 out of your pocket. So that's why we say do it straight away, because yes, technically you don't have to get it straight away. You only really need it when you're doing your tax return and you're meeting with your accountant. It's an important thing not to forget, because it can be very costly.
Absolutely. And I think a lot of investors, mum and dad investors, first-time investors, are not aware of all of these options that are available for them. So, having that conversation with the managing agents or with the trusted advisor always helps to know what they are, able to claim on their property, especially now that the COVID-19 has affected a lot of businesses, a lot of cash flow perspective. Whatever you can get back at the end of the day is going to help them in their pocket as well.
Absolutely.
So overall, with the COVID-19, so the main changes or the main impact that has had on your business is mainly to do with inspections. Is that right? Are anything else particularly changed?
Yeah, not really. I mean, other than the social distancing protocols that we have to roll out in the offices and that sort of thing, we've never gone through so much hand sanitizer. Obviously,
Yes.
those things notwithstanding, really, I guess when you look at, say, having a tax depreciation schedule done, most of the time we're engaged remotely via a phone call or via an email, so we don't typically tend to always meet our clients.
Yeah.
The only time where we would normally see them is on site.
Yeah.
And really for almost all of our depreciation schedules, we need to do an inspection, and we'll either need to meet the owner or the tenant or the property manager. And we've certainly had some pushback from tenants saying that they didn't want to provide access to the property.
Yeah.
But we've actually found that a lot of the reason for that is some of the people were actually health workers. So it wasn't so much they were worried about our dirty, infected inspectors coming into their house.
Yeah.
It was more that they were health workers and they thought that they might actually pose a risk themselves. So we've found most tenants to be very, very sort of accommodating, which has been fantastic to see.
Yeah.
Some of them we've actually had properties that had detailed plans available online, and we've had some tenants kind enough to guide us through their property on their mobile phone through Zoom. So that's been really fantastic. Yeah.
That has helped everywhere, hasn't it? Even for our property management side of things. And our landlords are loving it as well, because they get to see a video. We get to ask them, okay, check the smoke alarm, check this, check that. And they get to say, yes, it works. Yeah, no, it doesn't. And then, we get to take action. So I think technology, out of all of this, technology has been a big winner. And fast tracking and making things a lot easier for the business.
I think so. And yeah, I've seen a few of your great videos as well. So you're absolutely nailing it. But you're a tech wizard yourself anyway. But hopefully there are some side effects, I guess, of this, and that is a little bit more adoption of the available technology. And we've really been forced into a flexible working experiment. And I think it's one of those opportunities where we're able to test, are the systems going to work with the remote setup? Where are some of the areas that we can get more efficiency? And I'm wondering if we will travel as much to meet face to face for certain things. Or whether that might be reserved for later on in the relationship. I'm not sure, but I think we will be beneficiaries of this in some ways.
Absolutely, because if you can save the time and be more efficient with the, because what are the types of things, the questions that you are asking or the things that you're checking at an inspection? Is that you're looking at the quality of the build, or what exactly are you looking for when you're looking at these things?
Yeah, so when we're doing an inspection, we're measuring the property and we're measuring the specific floor coverings as well, because carpet and vinyl is treated differently to, say, tiles and concrete. And of course, they all have different construction costs depending on the flooring type. So there's measurements where we're taking notes of all the plant and equipment items inside. So all of the kitchen appliances and the models and those sorts of things, air conditioning, ceiling fans, hot water systems, that sort of stuff, and detailed photos around the property. We're also looking, of course, the quality of the build, because we need to estimate the construction cost. And specifically, where a lot of the expertise comes in is identifying improvements. So many of the older properties had been improved by the previous owner. So it might be the case that the current owner doesn't even necessarily know that it's been done. So that's where it's important to have a forensic eye. And we're also, of course, looking at things like landscaping, retaining walls, driveways, and those sorts of things.
So a lot of it, a physical inspection would be required to be able to ascertain and get a feel for the place, as opposed to, okay. So virtual would not potentially be fully able to replace the physical inspections, but it does make life easier if we're possible.
I think if you had a tenant that was open to the idea and it wasn't sort of seen as just merely an inconvenience to them, it could be possible to do it.
Yeah.
The photo part of it could certainly be done, and the tenants that we've worked with have been kind enough to follow the instruction and just say, okay, do you mind sort of popping the camera, underneath the floor here so we can have a look. Measuring the property is a little bit more specialized, so there will be some opportunities, but really there is a lot of value in a qualified trained person going to that property with that forensic eye. I mean, I can't go out to dinner with my wife without looking at the fire services and where the emergency indicator panels are. I've completely ruined any chance of romance at a dinner date. But that's just the way that your brain becomes. It's the way you get trained, right?
That's it, absolutely. Oh, it's got its benefits. And what are the two-stage depreciation schedules?
Yeah, so fairly early on in the crisis, the Australian Institute of Quantity Surveyors had consulted with the tax office to say, well, if there's a situation where an inspection really needs to be done to be able to guarantee that the report is correct, then that they're open to the idea of us preparing a depreciation schedule based on what information was available online. So we might have an idea about how big it is, but not necessarily what all the exact floor coverings were. And we could use our expertise to provide an estimate. So that would be stage one of the report, with the idea that once the inspection became available, we would actually go and amend that report, and the tax office would allow for those figures to be adjusted. So that provision, the AIQS announced a little while ago. We haven't needed to do that as yet. We've been able to access all of our properties, thankfully. But that's something that just makes it available to property investors. If there is some particular situation, they need to get their tax done. Perhaps there's someone in the property that's in quarantine, which would make it impossible. And that is an option. So you can at least claim those deductions, and they should be fairly close. But really, to be able to be fully compliant with the tax office, you would need to have that inspection done and adjust it.
Okay, so that is particularly applicable to this time where physical inspections are limited, and if tenants are not allowing that, that's good actually. At least they've allowed you to claim that benefit on an approximate, which is what it is, and then it's validified afterwards, if that's a word. The validity of it is confirmed afterwards once the physical inspection is done. So that's pretty good, I guess. And what are you seeing from the market perspective? I'm sure there's a lot of conflicting information out there about where it's going to go up, it's going to go down. What are your thoughts on what's going to happen?
Yeah, I mean, one should be a little bit cautious of the media. I mean, that article with the CBA saying prices would go down 32% or something like that. If you read deep enough, you'll see that this is actually not their expectation of what will happen. It's what could happen as a worst case scenario sort of thing. And a good friend of mine, Pete Wargent, says that things are rarely as good or as bad as they seem. And I think that is a really good framework for viewing the media. Certainly there are concerns on the market, and there'll be certain pockets and certain sectors that will do worse than others. But right now at the moment, given that we've got pretty unprecedented amount of government support with JobKeeper and JobSeeker, and we've also got the 6-month mortgage holidays, there really wouldn't be a lot of people that are needing to sell at this point in time. Now it's up for debate what happens once that's all rolled out. But right now, if you've got a mortgage holiday, you don't need to sell. And I think we would all agree that now is not the time to sell. You would only be doing that if you were mid-transaction and you were upgrading or moving or something like that. So we've definitely seen the transaction volumes just grind to a halt. And I don't need to tell you that. You're actually plugged in closer to that than I am. The buyers agents and mortgage brokers that I speak to have noticed a huge drop in inquiry, but it's starting to change. Already REA are saying that the viewing rates on their websites of people looking at listings have come straight back up. So buyers are out there looking for those opportunities.
Absolutely. I think it is, again, as you said, that what happens after the incentives finish, and that's where the speculation is of, whether it's going to go plunging down or it's going to be, a more of a staged approach. But at this stage, things seem to be not as bad based on the incentives that we have and the consumer confidence. I think that's the main thing that's driving a lot of the results is the level of the consumer sentiment, so to speak, and what's impacting that. So at this stage, given the open homes are back, given the auctions are back, and the stock on the market is not as much as it has been when there's been a lot of supply. It's not too bad to be able to sell now, and it's a great time to upgrade. Because obviously there is more savings to be had in that higher price bracket if you are upgrading than to wait and see what happens with the market. So there you go. And is there anything else that you would advise the investors that need to know now? Like, for example, obviously coming close to the end of financial year, or anything in general that they should be, looking out for?
Yeah, look, I think market-wise, I'd encourage people to be wary of the media. And understand that at the moment there's not a lot of people in enough duress that would force them to sell their property. And I think property is a pretty robust sort of asset class. I mean, we're seeing so much volatility on the stock market, but it's a lot harder to buy and sell property. It takes quite a lot of time. So that tends to sort of flatten out the impacts, and you can't live in your share portfolio, whereas every house is a home to somebody, whether it's an owner occupier or an investor. So I would caution against panic. From a tax point of view, obviously tax time's coming up. I think it's all the more important that investors claim their entitlements this financial year, because it may be important to have that cash buffer if you do have a tenant that is struggling to pay the rent and there's a moratorium on evictions. And I think it's just smart to have a good cash buffer. The ATO have highlighted a couple of things that they're going to be targeting very carefully, and that's going to be things like repairs and maintenance claims. So when you go to your accountant, obviously you'll need to bring in your mortgage documents to claim on the interest, your property management invoices and those sorts of things. And a good property manager such as you guys would have a record of what's been spent over the course of the year. And it's important to understand what's repairs and maintenance and what needs to be depreciated over its life. Everyone wants to claim repairs and maintenance because you can claim it in 1 year, right? But if you're improving something that's remaining in place, it's a repair and maintenance expense. But if you're replacing something, so a hot water system has broken, for example, and you're putting a brand new one in, that's not repairs and maintenance. And the tax office have said that they'll be targeting people that are incorrectly making those claims. They've also said the use of the property. So if you have a holiday home and it's partially rented out for part of the year, they're going to be targeting people to make sure that they're only claiming that that portion of the property for that particular time. And the last one, if I may, that is if you're redrawing equity on your investment property, you're not claiming the interest deductions on it if it's not for a deductible purpose. So if you are redrawing to do some renovations on your principal place of residence, you need to be making sure that you're not claiming that as a deduction. But a good accountant will help you to navigate all of that. But I think it's just a good time of year to start thinking about it and have all of that information ready come 1 July, so you can start planning to go and see your accountant and get some money back in your pocket.
Absolutely.
Hopefully.
There's nothing that you're aware of similar to what businesses are allowed from a instant write-off of assets. There's nothing for residential landlords, is there?
There's been no announcement like a budgetary announcement where they say we're upping it from $1,000 to $10,000, or it's gone from $30,000 to $150,000, like as with business. There are some assets that you can write off immediately. So repairs and maintenance, of course, are an immediate deduction. If you've got assets that have a value of $300 or less when you buy the property, you can write that off as an immediate deduction. But that relates to plant and equipment items. So you'd either need to be buying a brand new property and have an asset that's worth under $301, or if you're adding a plant and equipment item that's under $301. So if you put in a $280 ceiling fan, you can actually claim 100% of that ceiling fan.
Yeah, okay, perfect. And that's obviously one ceiling fan. If you've got multiple, then it's more than 300. So it doesn't, it doesn't allow that.
Yes, you've got to be wary of a set rule. So there's a couple of things, but it's not quite the same. There's not as many incentives as there are out there for small business entities on a depreciation point of view, unfortunately.
Yeah, perfect. Okay, so I guess in a nutshell, overall, COVID-19 hasn't had that much of an impact from the business operations point of view, but in the sense of inspections, it's limited, the number of people going through and how often and so on. Is there any other final words that you'd like to share?
No, I'd just like to say thank you very much for inviting me on, and hopefully we'll catch up in person again soon. And thanks for the part that you're playing in putting your audience in front of quality information. I think that's sort of the duty of business people and experts at the moment, is to share their knowledge and their wisdom and try and educate people through, because there will be another side.
Absolutely. And I think it's just sort of breaking it down into sort of digestible pieces and being able to comprehend what has happened, because there is so much information out there. There is, especially from an incentives point of view as well, there is just an overwhelming options that are available for everyone, but people don't know what they can go through. So, having experts like yourself come on and tell us what's available for our clients, I think that is invaluable.
Well, thank you very much for having me. It's always a pleasure.
Perfect. Thank you. I will end the live now, and we'll see you next time.
Cheers, Emil.
Thank you.